There are these places on our planet so vital, they're basically the circulatory system for the whole global economy. They're the arteries that carry the lifeblood of our modern world energy. And the most important one isn't a pipeline or some superhighway, it's a narrow stretch of water. And its tightest point, it's just 21 miles wide. Through this channel, the Strait of Hormuz, a full fifth of the world's entire daily oil supply passes. For decades, it's been a flashpoint, a geopolitical fault line just waiting to crack. In this explainer, we're going to break down a hypothetical scenario set in the very near future of early 2026, where this critical artery isn't just squeezed, it's completely severed. So let's dive in. What we're doing today is a deep dissection of a global shutdown, the hypothetical 2026 Strait of Hormuz crisis. And let me be clear, this isn't just a story about a regional war. No, this is the story of our connected world and how a single spark in one corner of the globe can ignite a fire that threatens to burn down the entire economic order. We're going to trace the fallout, the ripple effects, moving from the initial military strike to the paralysis of global shipping, to the shockwaves that just hammered the energy markets, and finally to the geopolitical mess that leaves the entire world standing on a knife's edge. Before we jump in, don't forget to like, comment, and subscribe. This helps the channel grow, and check out the links in the description if you're looking for a real estate agent in your market or you need life insurance. My team and I can help you anywhere nationwide. All right, here's our roadmap. First up, we'll look at the catalyst, the military strike on Iran that lights the whole fuse. Second, we'll watch the immediate result, the choke point slamming shut. Third, we'll analyze the global energy shock as markets just completely freak out. Fourth, we'll examine how the world's major powers try to deal with the crisis. Fifth, we bring it all home, looking at what this means for markets, for gold, and for the threat of inflation. And finally, we'll explore the incredibly uncertain path forward and try to figure out what comes next when the whole world order gets turned on its head. So let's get started. Section 1, the spark. Look, a crisis this big doesn't just pop up out of nowhere. It's the end result of years, even decades, of simmering conflict. This hypothetical strike in 2026 is what you get after a total breakdown in diplomacy. Stalled nuclear talks, an escalating shadow war fought with proxies all over the Middle East, and a series of tit-for-tat attacks that finally boil over from covert ops into open warfare. On February 28, 2026, this is when it all blows up. Under the codename Operation Epic Fury, the US and Israel launch a massive, coordinated air and missile campaign. The official goal? To neutralize Iran's nuclear program and smash its conventional military. And the targets are everywhere. Hardened nuclear sites, missile bases, naval ports, command centers. The first strikes are brutally effective. And in the opening hours, something world-shaking happens. Iran's supreme leader, Ali Khamenei, is killed. It's a decapitation strike meant to cause chaos, but the response is instant and it is furious. Iran unleashes its own huge arsenal of missiles, targeting Israeli cities and critical U.S. bases across the Gulf. And the conflict doesn't stay contained. The very next day, Iran's most powerful proxy, Hezbollah, opens a second front, firing a barrage of rockets from southern Lebanon into northern Israel. The whole regional tinderbox has gone up in flames. And that brings us right to the first, and honestly, the most massive economic fallouts. Section 2, the choke point shuts. Iran didn't just hit back with military targets. No, it chose to strike at the global economy's most vulnerable point. It weaponized geography, turning that 21-mile-wide channel into the epicenter of a worldwide crisis. Now, to really get a grip on what happens next, you have to understand just how critical the Strait of Hormuz is. It's the only way for ships to get from the Persian Gulf to the open ocean, period. Producers like Saudi Arabia, the UAE, Kuwait, Iraq, Qatar, they all depend on it to get their energy out to the world. Every single day, almost 20 million barrels of oil pass through here. That's a fifth of all oil traded by sea worldwide. And get this, nearly 85% of that oil is headed to Asia, powering the economies of China, Japan, India, and South Korea. So this isn't just some regional problem, it is a direct threat to the primary engines of the global economy. Iran didn't waste a single second putting this economic weapon to use. Within hours of the first strikes, ships in the area started getting these chilling warnings over their radios. The message, coming from Iran's Islamic Revolutionary Guard Corps, or IRGC, was simple and left no room for doubt. No ships will be permitted to pass. Iran never issued a formal declaration of blockade. It didn't have to. The threat itself, broadcast openly and backed by the IRGC's swarm of fast boats, sea mines, and missiles, was more than enough. It was a de facto shutdown of the world's most important waterway. And this wasn't just some empty threat, not at all. The IRGC immediately started making examples out of anyone who dared to test them. This table here shows just a handful of the attacks in the first 4 days. And it shows the human cost, the terrifying reality for sailors out there. On March 1st, the tanker Skylight was hit, killing 2 crew members. Same day, another tanker, the MKD Viam, was struck by a naval drone, killing another sailor. An American flag vessel was damaged. The container ship Safim Prestige was hit so bad its crew had to abandon ship. Traffic through the strait didn't just slow down, it completely collapsed. Data showed a 70% drop within 24 hours. Within 72 hours, it was basically zero. By March 2nd, if there was any doubt left, it was completely wiped away. A senior IRGC official went on state media and made the threat public and explicit. The quote is chilling. The strait is closed. Any ship that passes through it will be threatened. For the global shipping industry, for insurers in London, for energy traders everywhere, that was it. The risk was no longer a maybe, it was a promise backed by deadly force. The Strait of Hormuz was, for all intents and purposes, a no-go zone. But here's where it gets interesting. The blockade wasn't a total shutdown for everyone. Geopolitics started creating some very telling exceptions. This was a political move as much as a military one. At first, Iran suggested that Chinese-owned ships might get a pass, a clear nod to Beijing, their biggest oil customer. And then things got really weird. Ships started broadcasting their ownership status for everyone to see. The vessel Iron Maiden actually changed its public identifier to read China owner, just hoping to get through safely. Another one, the Bogazici, broadcast Muslim-owned and reportedly passed unharmed. By March 5th, the IRGC made it clear the strait was closed specifically to ships from the US, Israel, and their Western allies. This wasn't just a blockade, it was a chess move designed to punish enemies while trying to split them apart. So this de facto blockade, it leads straight to our next major ripple effect, Section 3, the global energy shock. With a fifth of the world's oil and a huge chunk of its natural gas suddenly trapped, the impact on global markets was immediate, and it was brutal. The tremors were felt in every single major economy on the planet. Just look at this chart. It's basically a picture of pure market panic. Before the crisis, Brent crude oil was trading around a pretty stable $70 a barrel. In just over a week, it went vertical. On March 8th, it peaked at $126 a barrel. That's an 80% surge. This pushed oil over $100 for the first time in 4 years. This wasn't just a price spike, it was a massive shock to the entire global economic system, threatening to bring back the same inflation that central banks had just barely managed to get under control. And it wasn't just oil, not by a long shot. Europe especially felt an immediate jolt in its natural gas markets. As you can see here, European gas prices more than doubled in just a few days, jumping from around 30 euros to over 60. And the reason's simple. About 12 to 14% of Europe's entire supply of liquefied natural gas, LNG, comes from Qatar. And every single one of those giant ships has to go through the Strait of Hormuz. For a continent that had just gotten off Russian gas, the crisis exposed its Achilles heel all over again. It was a brutal reminder of just how fragile these global supply chains really are. So why did traffic just stop? Well, to understand that, you just have to follow the money. And this number says it all, $7.5 million. That became the new price tag for war risk insurance for one large oil tanker to make one trip through the region. Before the conflict, that same insurance cost about $625,000. We're talking about an increase of over 1,000%. By March 5th, the big insurance companies just stopped offering coverage for the region entirely. It became financially impossible, not to mention physically dangerous, to operate there. The risk was just too high for any company to take. What you're seeing here is how the whole system just came apart at the seams. It was a chain reaction that brought the entire energy export industry of the Persian Gulf to a grinding halt. First, the big shipping companies, giants like Maersk, they suspended all trips into the Gulf. Step one. Then, because tankers couldn't get out, producers like Iraq and Kuwait started running out of places to store their oil, so they had to cut production. Iraq's southern fields, for example, saw their output drop by 70%. Next, since they couldn't ship their product, Qatar and Kuwait declared force majeure, basically a legal get-out-of-jail-free card for their contracts. And finally, any essential traffic that still had to move was forced to go the long way around Africa, a journey that adds weeks and millions of dollars in costs. Before we continue, a quick reminder to like, comment, and subscribe. This helps the channel grow. And check out the links in the description if you're looking for a real estate agent in your market or you need life insurance. My team and I can help you anywhere nationwide. Okay, let's pull the lens back a bit. As the economic damage just kept piling up, this crisis quickly turned from a regional military fight into a high-stakes diplomatic and strategic game for every major world power. Section 4. A world reacts. Let's start with China. For Beijing, this whole thing was, well, it was a nightmare. On one hand, China is the biggest buyer of Iranian oil, getting it at a huge discount and giving Tehran an economic lifeline. But on the other hand, China has poured billions into the Arab Gulf states, the very same countries now getting hit by Iranian missiles, which, by the way, were likely built using Chinese parts. Talk about an impossible bind. In this quote from Tuvia Gehring at the Atlantic Council just nails it. For years, Beijing had been trying to set itself up as a new power broker in the Middle East, even getting Saudi Arabia and Iran to talk again in 2023. They saw an opening as the US seemed to be pulling back. But when a real hard power crisis hit, China's response was, as one source put it, characteristically limp. They issued some generic statements calling for restraint. But despite all its economic power, Beijing just didn't have the military or diplomatic muscle to actually change anything, leaving it stuck on the sidelines watching a crisis that directly threatened its energy supply. All right, now let's talk about Russia. If China was caught in a strategic bind, Russia was just exposed as an unreliable ally. Despite years of talk about leading some anti-Western bloc and creating a new multipolar world, when its partner Iran was under attack, Moscow's response was, well, it was telling. Brian Whitmore's analysis really cuts right to the heart of the matter. The Putin regime is so completely bogged down by its long, expensive war in Ukraine that it just doesn't have the bandwidth, militarily, economically, or politically, to do anything significant anywhere else. When the bombs started falling on Iran, Russia's foreign minister basically just offered sympathy and verbal support. After Khamenei's death was confirmed, Putin offered condolences. That's it. The crisis showed the world that Russia's alliances are thin and its promises of a new world order are pretty hollow when things get real. And the European Union? Well, for the EU, the crisis really just exposed this strategic vacuum and the deep divisions that almost always paralyze its foreign policy. Brussels found itself stuck between a rock and a hard place, torn between completely different priorities. This quote here really breaks down the impossible position the EU found itself in. You had one group of countries, like France, wanting to focus on international law and condemn the strikes. You had another group, especially in Eastern Europe, saying, no, we have to stick with Washington no matter what. And then you had a third group that was focused on Iran itself, kind of hoping the strikes might weaken the regime, but terrified of a bigger war that would send millions of refugees their way. Trying to square all those circles? Impossible. The EU was paralyzed and couldn't come up with a unified response. Okay, so we've looked at the military side, the shipping shutdown, the diplomatic mess. Now let's bring it all home. Section 5, Markets, Gold, and Fear. This is about what a crisis on the other side of the world really means for financial markets, for your investments, and for the price of, well, everything. You know, when there's this much fear and uncertainty, investors don't just walk, they stampede to safety. And the ultimate safe haven asset, gold, had a historic surge. In one single crazy trading session, the price of gold shot up over $200, blasting past $5,300 an ounce for the first time ever. This wasn't just computers trading. This was a fundamental flight to safety. Investors were dumping risky assets like stocks and running to the timeless security of gold, an asset that has preserved wealth through wars, crises, and currency collapses for thousands of years. So while all that money was flooding into gold, it was gushing out of the stock market. And this quote from Janice Henderson reveals a painful truth about markets. The areas that got hit the hardest were the ones that had been doing the best. Stocks in parts of Asia, which had been on a tear for the first 2 months of the year, suddenly got hammered by a strengthening US dollar and the threat of an oil shock. It was a classic risk-off move, where yesterday's winners become today's biggest losers as global money runs for cover. So now, the global economy was staring down the barrel of a double threat. On one side, you've got a massive inflation risk. The huge spike in oil and gas prices acts like a global tax, threatening to bring back the same inflation that central banks had fought so hard to beat. But on the other side, there was a major growth risk. Those same high energy costs were guaranteed to slow down the economy. So analysts started warning about stagflation, the absolute worst of all economic worlds. That's that toxic mix of high inflation and a stagnant economy. It's a nightmare scenario with no easy fix. And this stagflationary threat, it was absolutely brutal for countries that were already on shaky ground. The crisis pushed many right to the brink. In Egypt, the Egyptian pound collapsed to a record low, with the president warning of a state of near emergency. Turkey's central bank had to burn through $12 billion, that's 15% of its entire foreign reserves, in just a few days to stop its currency from collapsing. Even major economies were hurting. Japan, which gets 70% of its oil through the strait, had to ask for a global release of strategic oil reserves. And Pakistan, a huge country that depends on imported fuel, had to officially ask Saudi Arabia to reroute emergency supplies. This wasn't some abstract economic problem. It was a full-blown emergency for dozens of countries. And that brings us to our final section, the uncertain path forward. We've traced the crisis from the first spark all the way to global economic chaos. But with the world standing on a knife's edge, the biggest question is still out there. What comes next? The single biggest thing fueling all the panic and fear in the markets is this one simple but huge uncertainty. As analysts pointed out, nobody really knew what the US and Israel's ultimate goal was. Was it to completely destroy Iran's nuclear program? Was it just to weaken its military? Or was it full-on regime change? Without a clear endgame, it's impossible for anyone, markets, diplomats, allies, to predict how long this conflict could last or how much worse it could get. And if there's one thing global markets absolutely hate, it's uncertainty. But there's a political wild card in all this that could end the fighting surprisingly fast. And that wild card is American domestic politics. As one analysis noted, with crucial midterm elections coming up, the US government would be under immense pressure to deal with high gas prices at the pump. This creates intense political pressure to find an exit no matter what's happening on the ground militarily. It raises the very real possibility that military goals could get pushed aside for political needs, leading to a sudden declaration of victory and some kind of deal just to get the strait reopened, get the oil flowing, and bring prices down before Americans vote. The length of this global crisis might not be decided on the battlefield, but by an election calendar in the United States. As we wrap up, please take a moment to like this video and subscribe to the channel. And remember, for any real estate or life insurance needs, my team and I can help you nationwide. Just check out the links in the description. And so, here we are, standing on a precipice. The initial shock is over, but the world now has to face the grim reality of a long energy crisis and an unresolved, high-stakes geopolitical standoff. The temporary fixes, rerouting ships, releasing reserves, that stuff can only work for so long. The fundamental structure of the global energy supply has been broken. The question we're left with is no longer if the global economy will be damaged, but how badly. And maybe more importantly, who is ultimately going to be forced to pay the price?